Hi, my name is Pat Keown. I'm a senior research analyst with Refinitiv Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, September 16th. We'll start this week's report by taking a quick look at the overall results for each fund asset group. As the slide indicates, equity mutual funds saw net outflows of $8.1 billion. Taxable bond funds and muni bond funds both took in net new money. Taxable bonds at $2.5 billion, muni bond funds at just over $500 million. And lastly, we see large net outflows from money market funds. They saw $50.5 billion leave their coffers, which was the 10th largest net outflow ever for the group. Let's take a quick look at the market activity for the week. We see the equity indices posted mixed result for the fund flows trading week. The Dow Jones Industrial Average recorded an increase of 1.5%, while the Nasdaq Composite Index and the S&P 500 Index both retreated at 0.8% and 0.4% respectively. The Dow captured the lion's share of its gains during just 2 trading days this week, on the strength of a progress towards a vaccine for the coronavirus and a busy week for initial public offerings. In total, 12 companies were scheduled to go public, led by the cloud computing company Snowflake. Snowflake's IPO raised $3.4 billion, making it the largest software IPO ever, easily outdistancing the $1 billion raised by VMware in 2007. Tech stocks continue to slump, weighing down the Nasdaq. As the economy continues to recover in fits and starts from COVID-19, the current valuations of tech stocks are seen as too high. After closing at its high water mark on September 2nd, the index has shed 8.3% over its last 9 trading sessions. Prior to this recent downturn, the Nasdaq had appreciated 56.6% since the end of the first quarter, as investors sought out large cap tech stocks as a safe haven asset group to ride out the global pandemic. The most significant market news of the week revolved around the Federal Reserve's regularly scheduled 2-day policy meeting, which concluded on September 16th. The Fed announced that interest rates will remain unchanged at near zero, and they expect them to stay there for the foreseeable future. All 17 Fed governors forecast that rates will remain near zero through the end of 2021, and another 13 also predicted that rates would stay unchanged through the end of 2023. The Fed further explained that rates would be held at near zero until inflation has increased to 2% and is expected to stay at that or above that threshold for some time, and the labor market aligns with the Fed's view of maximum employment. Let's turn our attention back now to the fund flow activity. We'll take a closer look at each one of the fund asset groups and explain in more detail. We'll start with equity mutual funds. As we said, an $8.1 billion net outflow for this group last week. It was their 21st straight weekly net negative flow. As usual, what we've seen over the recent time frame, most of the net outflows are coming from the domestic equity funds. So $6 billion leave this week. Non-domestic equity contributed $2.1 billion to the total net outflows. If we drill down a little bit further, we'll get a little bit more granular, look at the peer group level. We see large cap core funds and emerging market funds with the largest net outflows at $2.4 billion and $532 million respectively. Our next group to look at is equity ETFs. Net inflows for this group last week, they took in $5.3 billion of net new money. The increases were paced by a couple of S&P 500 products. We see the iShares Core S&P 500 ETF and the Spider S&P 500 ETF with net intakes of $4.2 billion and $2.4 billion respectively. On the flip side, we see Invesco QQQ Trust 1 with net outflows of just over $2 billion. And the Select Sector Utility Spider product had about $465 million leave their coffers. Our next group is taxable bond funds. Net inflows for this group last week, they are on a net inflow string. They've now have 23 consecutive weeks of taking in net new money. They grew the coffers by $2.5 billion last week, led by the core bond funds and core plus bond funds peer groups, with net increases of $890 million and $802 million respectively. Our next group to look at is taxable bond ETFs. Another inflow here as well. They grew their coffers by $4.5 billion. This was driven by the iShares short-term Treasury bond ETF. Took in just over $1 billion of net new money. This was followed by the iShares Core U.S. aggregate bond product with net inflows of $647 million. We see on the sell side the iShares iBox Dollar High Yield Corporate Bond ETF and the iShares iBox Dollar Investment Grade Corporate Bond ETF with net outflows of $287 million and $137 million respectively. Our next group to look at is muni bond funds. This group is also on a net inflow streak. They've had net inflows in 19 consecutive weeks. This week they took in $502 million of net new money, driven by short muni debt funds and short intermediate muni debt funds, which had net positive flows of $199 million and $135 million respectively. Our last group to look at is money market funds. Money markets, as I said, $50.5 billion in net outflows last week, the 10th largest weekly net outflow ever for this group, driven by the institutional U.S. government money market funds and the institutional U.S. Treasury money market funds peer groups, which saw $28.7 billion and $19.1 billion leave respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.